So much for joining us for our sales meeting this Tuesday. I'm Carrie Mitchell. Some of you may notice I look a little bit different than our regular host. Thank you for noticing. If you come to these sales meetings for the self-proclaimed great hair and funny jokes, Michael will be back next week. He's actually at a training called Train the Presenter right now in Strongsville with a few of our other agents, learning the best ways to put on amazing trainings for you guys. So thank you, Michael, and everyone who's there for taking time out of your day to learn. So today's sales meeting is going to be Expand the Options Creative Financing, and we're going to be joined by our awesome partners at Cross Country Mortgage. Without further ado, let's get started. Please bear with me, everyone. The last time I've talked this long on a Zoom was in 2020 when I made the video on how to create a commission request. Some of you may be familiar. Okay. So this Wednesday, actually tomorrow morning, in our Rocky River office, we have our quarterly investor mastermind. This one is going to be an experts panel. We're going to be joined by Jermaine Brooks, Eric Akbar, Wendy Dixon, and Mike McCandless. They're all going to talk about the specific investment route that they are experts in. Again, that's going to be sponsored by Greater Metropolitan Management. So be sure to pop by for that for breakfast and an awesome panel where you can ask questions. This one is going to be in person only, but it will be recorded if you can't make it. Next is a 3-hour CE. This one is via Zoom. It will be your core credits for civil rights. So if you don't have those yet, this is a great one to jump on. Again, it's free. It's on Zoom. The date of this is September 27th. It's a Tuesday at 11 a.m. So you can pop on it right after the sales meeting. Next, we have our business planning clinic. So this is our marquee event that we do every year where you can set your goals for 2023. Can't believe that's already coming up. You can use the code KWGMAgent when registering to get $10 off your ticket. If you liked it last year, be sure to come on back for more. If you did not like it last year, it's going to be better this year. So be sure to get your ticket. We're going to implement a little bit of the shift into the materials as well as some of the 6 personal perspectives. So it'll be a little bit updated and fresh from last year. So again, be sure to get your ticket to that. All right, so what is this? This shows that Keller Williams Greater Metropolitan, that is our office out of Cleveland, Ohio, ranks number 2 in profit share out of all market centers in the country. I feel like there's 900. So that's pretty good, obviously. So we've profit shared over $700,000 this year. Now, if you have not received any profit share, you're not a part of that, you're welcome to be. I'm going to let Aaron Kaufman talk in this video a little bit about an event we have coming up. Let's see.
Hello to my fellow KW stakeholders. It's Aaron Kaufman, self-titled Chief Stakeholder Evangelist out of Atlanta, Georgia, and can't tell you how excited I am to have the opportunity to come back to Cleveland to teach my innovative profit share building class, The KW Effect, to you on Wednesday, October 26th from 9 to noon at the Aviator Event Center in Cleveland, Ohio. Now, guys, I've had a lot of success attracting agents to KW and building wealth through KW Profit Share, and this is really my chance to give back and share with you what I've learned along the way. Now, this will be a 3-hour class. I'm literally going to talk about the profit share money for 10 minutes. The rest of my session is what I call a unfiltered Keller Williams stakeholder meeting, and I am coming there to inspire you, but more importantly, I am coming there to empower you on how to get into higher level, more authentic conversations with people about our company so you get more purposeful about growing your 401kW. And Gary Keller says it best, the greatest shift of wealth and opportunity are in down cycles, not up cycles. I think it's fair to say in this shift that we're in, agents need what we have to offer right now more than they've ever needed us. So if you want that kind of information, hopefully I'll see you on Wednesday, October 26th from 9 to noon at the Aviator Event Center in Cleveland, Ohio. If that information doesn't interest you, that's okay. That's just more profit share for the rest of us. See you soon.
All right, so again, if you're not getting your unfair share, we are number 2 in the country for profit share. This is something great that you guys can easily get in on. Aaron Kaufman's class is going to be a great tool to help you guys if you don't really know where to start. So here's a little bit more details about it. Julia will throw the registration link in the chat. The last time we brought Aaron to Cleveland was in 2019, so he does not come often. So this is a great event that you do not want to miss. All right, and then we are on the road again for career night. So if you have anyone interested in getting their license, or they are licensed and they're not happy at their current location, you can invite them to career night. We have one at the Shaker Heights Public Library coming up next Monday. We're actually almost sold out of that one. So if you want someone to go, be sure to invite them right away. The link will be in the chat. And then the Rocky River one is going to be on the 26th at the Rocky River Public Library. And if you invite someone, you're welcome to join them as well. We love having agents in the room, so you can get a ticket yourself. Next is our Mega Agent Camp recap. So this is great if you missed Mega Camp but want to check out everything that was discussed there. So Michael Orbaski is going to be going over a market update as well as some shift tactics that Gary shared, and we're going to give you guys those slides. And then you're also going to receive a Mega Agent Camp playbook. So what that is a combined list of PDFs of tactics and tools used by some of the top agents in the country. It's some of their tools, whether it's farming, things like that, and you're going to get that. We've also invited all of our vendors there, so you guys will have some goodies to take home, and there will be a catered breakfast. So that's Thursday, September 22nd from 9 to 11. And last but not least is the Clambake. Many of you have already gotten your tickets. We've sold almost 200 already. So if you haven't yet gotten your ticket, please be sure to do so. This is KW Cares' largest fundraiser of the year. We have an awesome live auction and some really cool raffle items available at this event. All right, so a partner update. First, we have our partners at Cross Country Mortgage. They are going to be doing the lion's share of the presentation later, but if they have anything they want to share now.
Just real quickly, some of the headlines, both that you'll see this week and next week. Inflation went up 0.1% today, and they were expecting it to go down 0.1%. So you're seeing markets move. The Dow's not starting off so great. Rates may push up a little bit. And then the Federal Reserve meeting is next week, starts on Tuesday, finishes Wednesday at 2:15. The question is, are they going to raise interest rates 0.5% or 3/4? Today's news probably leans it more towards 3/4. So I'll keep it short and sweet and save the rest of my time for a little bit later, unless Chris has anything.
No, I'm good. I'm good.
All right. Thanks.
All right, next. If we have anyone on the call from GM Title joining us today.
Good morning, everyone. I just wanted to remind everyone about buyer and seller docs. Those are the forms that we need to be returned and filled out completely by buyers and sellers. We cannot process the file without these. It has, very important information that we do need in order to ensure clear title, as well as something to point out also in there on the buyer's side of their packets. There is wiring instructions included in the initial send out. So just wanted to remind everyone, if you guys need to deposit earnest money, anything above $10,000, which does need to be wired by Ohio law, you can find those in that opening package, as well as when it is time to finally wire the proceeds or the money at the end of the transaction as well. You could resort back to that if you cannot find those in there as well. So just wanted to point that out, but right now that is our #1 holdup. So just wanted to let you guys know, it's always good to let your clients know to be on the lookout for those. And if they can't find them in their regular email box, make sure to check their spam. And that is it.
All right. And it looks like it's about time to get into the main portion of the meeting. So wow, that was pretty quick. We're going to kick it over to our experts at Cross Country. I believe they have a presentation they're going to share. If you guys have any questions while they're talking, I will be monitoring the chat, so feel free to leave something in there.
All right, good morning, everybody. All right, I'll be jumping back and forth here. I got a couple of slides, things to show here. So Don had another commitment here this morning. He had to jump off. So it'll be myself, Chris, and then you'll see Carmen pop up here a little bit as well. So, all right, so today our focus on is going to be, basically using financing tips and kind of getting the edge in a shifting market. So just obviously rates are always a hot topic, and I mentioned it 2 minutes ago, and I know it's a constant conversation with you and your customers. So what I just wanted to show is a little graph just showing interest rates. So this is from Mortgage News Daily, kind of an impartial. This is a company that does our site that does surveys to lenders. So it's not heavily, there's ads on here, but not, this is more for like the mortgage industry. But so current interest rate as of today, 5.98, and with the news today, likely to inch up a little bit more. So this certainly impacts the shift. I mean, you know, rates didn't necessarily drive this coming shift in the market, but obviously it's a factor. And I wouldn't say it's the rates, it's the economy. It's, you know, kind of the whiplash effect from COVID and the economic stimulus. And, you know, some sort of saw this coming with everything that we've seen over the past 2 years. But just to kind of give you a little perspective. So, you know, here we were less than 12 months ago, under 3%, and here we are now over 6%. So rates have literally doubled. And, you know, buyers are aware of this, you know, thanks to the media and thanks to, you know, conversation, and thanks to you realtors kind of keeping in connection with your, you know, the general public. You know, rates where they're at isn't a shocker. And hopefully, as you know, Chris, Don, myself, Carmen, we're having in-depth conversations with buyers about payments. So never, you know, are we working with a customer who is blindsided with a payment once they're under contract, because we're having this conversation ahead of time. But again, just going back to the shift, just to see where we're at. Again, this is 1 year, and this is as fast as interest rates have ever gone up historically. Jumping to a 5-year window. So, you know, rates were over 5% about 4 years ago. Nobody really remembers that. Everybody just sort of remembers this, the low point being under 3. But just to give you a little perspective, now if we go back, the last time interest rates have touched 6%, we got to go all the way back to basically the Great Recession, February 2011. They were just over 5. So we're looking back here, I think it was 2009-ish. So, but historically speaking, you know, here we are. It's not all that bad. Just looking over recent history, whether you want to look 12 months or 10 years, we're certainly at a high water mark. But historically speaking, you know, this is the last time back here is when we saw inflation kind of getting out of hand. And oh, by the way, it was about double where it is right now. But Chris and Carmen, feel free to jump in here. I always, you know, anytime I get a chart pulled up with the economy, I always look at Chris because he has the economics degree. I just have the financial management. But if you guys want to jump in here at any point, but just to give you a little kind of perspective about where we're at. But does anybody have any comments or questions on that?
I'll post the link in the chat here for that website.
There's just a question in the chat about what is the website that people can go to check out those rates.
There you go. Cool. I'll have a few flyers. I got just a 6-page PowerPoint we'll walk through today, and I put in here in the Dropbox or the chat 5 flyers that I'll pull up here as we're kind of going through. But anyway, feel free to download those as I'm chatting, or of course you could shoot any of us an email and I can get those to you separately. But so any other questions on interest rates? If not, I'll go ahead and jump right in. Oops. Get rid of that slide. Okay. All right, I think everybody can see that. Okay, so loans types to win with. So what I'm going to do here is a lot more detail on the flyers that I just dropped in, but I just want to highlight some of the basics, the simple ones: conventional FHA, VA, touch on USDA, and a few other kind of niche programs. And why I want to do this is talk a little bit about the basics, but take some of the myths out and try and get the point across about how this could be, you know, help you win deals in today's market. So conventional financing, again, just giving you a broad explanation here. Fannie Mae and Freddie Mac write the rules for conventional financing. Just about every lender out there does conventional loans. If you're a conventional buyer, oftentimes that's going to give you the most streamlined process. It's going to give you ideally the best interest rates. It's going to give you, you know, PMI, but with, you know, with the option of removal. Some of the benefits with conventional, and you've heard me talk about this on Tuesday meetings before, but recasting. It's a very powerful tool in this market where, yes, it's a shifting market, but you still have a lot of buyers wanting to buy before selling. So I'm going to touch on this real quick because we've spoken it so many times before. But let's say I own a house worth $100,000 and it's free and clear, and I'm buying a house worth $200,000, and I want to get at that equity in this current home. You know, you could do a bridge loan. You can do a home equity line of credit if it's not for sale, but that's a second mortgage, a second way of getting loans. So what we're telling a lot of people, or advising a lot of people, that's an option, is buy that $200,000 house, scrape up 5%, get $10,000 just to get into the house. Now you own 2 homes with a $190,000 mortgage. A couple months later, I sell my current house. Now I've got 100,000, maybe less commission. Let's say I have $90,000 to work with. I can call customer service and say, hey, I want to apply this $90,000 towards my $190,000 loan and recast, recalculate, re-amortize the loan. The payment's going to drop. The PMI is going to go away. It's a great option. It costs between $300 and $350 to do. You're not refinancing. You're not going through the whole loan process. You're not looking at new or higher interest rates. It's a great option, and that exists with conventional loans. Appraisal waivers, we've talked about those in the past as well. Many homes, if you're putting 20% down on an owner-occupied home, Fannie Mae and Freddie Mac will let us know if the property qualifies for an appraisal waiver. If it does, buyer has the option to waive the appraisal. We do not require one. We've worked with these a lot over the past couple of years. I'd say for every 20% down buyer, maybe it comes up 1 out of every 5 times. So, buyer can ask for it, but, Fannie Mae and Freddie Mac, is the computer system is the one that tells us, but that exists on conventional loans only right now. Investment loans, I'll tell you, I've done, obviously several loans over the years, but I've done probably as many investor loans over the past 30 months as I did, the previous 18, 20 years. So the investor market is a great niche to be in. We've taught the class on investing. In fact, there's the class in Rocky River tomorrow. I would absolutely encourage anybody to try and attend that or watch it recorded. It is great both for you as a realtor, but also you as an impossible investor yourself. So we deal with investors day in and day night throughout years. So it's a great specialty, I would say, even that I would consider ourselves as being part of. So if you have any inquiries in that, feel free to reach out. We do a lot in relocation. A lot of people think, well, a lot of lenders say, we can do your loan if you're starting a new job, but we need to have you on the job for 30 days or have a paycheck in hand. We have a fair amount of exceptions to that. If you have somebody who's maybe coming to the clinic, starting as a physician, or moving to Lubrizol from out of state, and they're not starting their job until December 1st, they'd love to move in November, we can accommodate. We can do that very, very frequently. Fannie Mae and Freddie Mac allow that. A lot of lenders don't like to do that. We absolutely will. So something just to be aware of. Something to mention on repairs. I'm going to mention repairs under each loan option here. Just because you're doing a conventional loan doesn't mean repairs are not going to show up. I recently had a loan where there was a deck 4 feet above ground, and it was kind of, the seller hadn't put the railings in. That was a safety issue. I had a transaction years ago where there were 3 inches of water and black mold throughout the house, and the agent was up in arms going, this is a conventional loan. Why do we care about repairs? 3 inches of water in the basement and black mold is, a major issue. So conventional, certainly you don't see quite the scrutiny that you do on property condition that you do on FHA and VA. But oftentimes it's a bit more streamlined. So conventional, we'll leave it at that. And most people know those just because it's the most common type of financing. So
I wanted to chime in on Recast just because it is awesome. Once I get a lot of calls, people asking about bridge loans. They think that's their only option. When you pitch the Recast, they never ask about bridge loans again. It's like kind of the number one best way to go. And I don't know that a lot of people know that it exists, and it is so inexpensive by comparison. So a great thing to have in your back pocket if someone's really worried about selling, they want to move, but they don't know what they're going to do with their current home. If they can qualify for both, like they would need to for a bridge loan anyway, this, relieves a lot of the stress.
That's huge. And I have a couple of agents who they lead with this. As soon as they talk to a buyer who has a house to sell, that's the part that, the homeowner may have heard of a bridge loan and may even ask about a bridge loan, and the agent counters with, that may be something to consider, but you should also look into recasting as well. And they sure do look smart when that's brought up. So good one, Chris. So we'll jump over to FHA. FHA, again, I'm not going to go through the guidelines with each one of these. These are, conversations we may have had before, and there's a lot of bullet points in the the documents that I uploaded. But FHA is great, 3.5% down. Doesn't matter if it's a 1, 2, 3, or 4 family. As long as you're living in it, you can do 3.5% down. Very flexible on credit. So some lenders will go to 640, 620. We'll go to 580, and I just closed a loan with a 560 credit score. Now the rate is a little bit higher when the credit is that low. The costs are a little bit higher, but this buyer couldn't get into a house with any other program, at least with a halfway decent interest rate and a smooth process. FHA often has lower interest rates than conventional. So if somebody's saying, hey, I've got perfect credit on a 30-year fixed and my rate is 6%, on FHA, it might be 5.875 or 5.75. Not a lot of people know that. You'll have to come to our class on FHA to get a little bit more detail on why that is. But FHA is a great program with very competitive, great interest rates. It's true. With FHA and VAs, we'll talk about in the next one, they're a bit more picky when it comes to condition, but they're not that bad. I would say for every 7 or 8 appraisals we do for FHA or VA, one of those has a repair. So sellers, realtors get so caught up in FHA repairs. It happens very infrequently. So don't be afraid of this. And a lot of times I had somebody say, I have a house, a listing agent who called and said, hey, I've got 3 offers on a house, conventional FHA, VA. The conventional offer is the lower. I'd love to go with FHA and VA. Make me feel warm and fuzzy about, the repairs. I said, what city is it in? They said, Shaker Heights. I said, is it point of sale compliant? They said, yeah, in fact, well, it's not right now, but it will be. VA and FHA seldom are going to be certainly any pickier than a point of sale inspection. And I would say nowhere near as picky. I'm sure they're going to note, GFCI outlets, handrails, chipped paint, but they're not going to, tuck pointing and all that sometimes come up, but it's got to be pretty obvious. So an FHA appraiser is nowhere near as brutal as a point of sale inspection would be. So anyway, if you've got a situation where you're a listing agent or you're a buyer agent with kind of wanting to get more detail, please contact us. Or if you're not even working with us, contact the loan officer that is, to shed a lot of light and hopefully, instill a little bit of confidence in that moving forward. So here's a statistic that I want you to kind of keep in mind. FHA and VA make up, depending on the market and the price range, between 18 and 26% of the marketplace. If you are a realtor saying, we're not going to consider FHA or VA offers, you're basically crossing 1 out of every 4 buyers off the list. If you're looking at a first-time home buyer price point of, under $200,000 and, in an area that's a lot of first-time home buyers, you might be crossing off 50% of personal buyers who do not, especially in a shifting market. I have several transactions right now where the buyers are FHA, they've won out about conventional offers or just, it was just a straight deal, and they're still getting seller concessions. So we're going to talk about seller concessions here before we're done as well. We will do escrow holds on FHA properties. So if there's some pretty heavy duty repairs, some sellers, some lenders will not touch escrow holds. We do them pretty routinely. It's on a case by case. We'll want to have a conversation, but if you are planning on doing an escrow hold, have that conversation with the lender as soon as it comes up. If it's during negotiations, if it's during point of sale reviews, if it's during ROC, have that conversation as quick as possible. You don't have to be a first-time home buyer for FHA. It's one of the most common myths. You can have an FHA loan on your first house, your second house, your last house, your 10th house. Just has to be owner occupied, and you can only carry 1 at a time, subject to some exceptions there. So kind of a quick, a common misnomer. Back in the day, 20 years ago, we used to say, yeah, we'd like to have 45 days to close on FHA. Not necessary. We close FHA loans in 3 weeks routinely. And again, my little note there of 20%, FHA oftentimes is 20% of the market. So 1 in 5 buyers. And, when you couple VA together, 1 in 4 buyers or more is going FHA or VA. So I'll pause right there to see Chris or Carmen, see if you guys have anything you want to add. Anybody out there have any questions? I don't have the chat box up here.
I have a question, Sean. It's Carol. Good morning.
Hey, Carol.
That recast, I saw you said something about bridge and recast. It made me think about seller. Now, would that fit a seller who's looking to buy, but they need to sell their home before buying another one?
That's exactly when we would most commonly use it is,
Right.
so yeah, so if you've got that seller, they qualify to carry two payments at once, and they can't get at the equity right now because maybe it's on the market or a short timeline, or they don't qualify for a bridge loan. Hey, scrape up X amount of dollars just to get in with the basic, and then kind of double down with that later on. It's a breeze. It's easy. I mean, it's not a full loan application that you have to get a few documents signed because it's a modification of the original loan, but it is a game changer. It really solves problems, creates a solution, and it's easier to qualify for that than it is a bridge loan, for example. And it's cheaper. You don't have to pay closing costs like you do on a bridge loan.
Okay. Thanks.
Yeah, no problem. We'll jump on to VA. We have a whole class on VA, so same thing, but VAs for veterans, qualifying veterans, we have to get their DD 214 and certificate of eligibility. If you're a veteran, you know what that is. Yes, a little strict on repairs, but they've softened up a little bit of that over the years. Close time, same thing. A lot of people think you need 45 days for a VA. We took an application and had it clear to close in 12 days on a VA loan. A lot of that was the appraiser was able to get out and get back so quick. This was on an $800,000 transaction. So maximum loan, you've got, I'll challenge anybody on here to hit the VA loan limit, but we just closed one for $816,000 last week with no money down. The buyer has a house to sell. So similar scenario, zero money down. They've got probably 100 or 200 coming in later after the fact. Now they can't recast in their scenario, but they're not too worried about that. USDA, again, there's in the document I put in the flyer here to upload, there's a bit of detail on USDA, but this is a great niche. There are 88 counties in Ohio, if I'm not mistaken, and feel free to correct me if I got that wrong. 86 of them have parts of the area that qualify for a USDA loan. This is another zero down loan. You do not have to be a veteran. It's primarily for first-time home buyers. There's income limits. PMI is discounted, but think of it as similar to an FHA loan, except no money down. Now, these do take a little longer to close because there's a secondary approval outside of cross-country mortgage or the lender. Phenomenal program. USD, so it's kind of meant for rural areas. Think of like parts of Aurora, but when you get into Manaway or Streetsboro, or if you're in Lake County, I forgot where the border is. We could, pull up the web page and start punching in, different areas. But Southeast Lake County, Eastern Geauga County, Ashtabula, Madison, these are area, and going out west in Columbia Station and west of there, parts of the Western Lorain County. It's a phenomenal program. Zero down. So your buyer's asking about down payment assistance. You go on these programs, you don't need to worry about down payment assistance. You're going to get a great interest rate, and it is a phenomenal niche to be aware of. So if you're taking a listing, instead, you're asking, oh, is this property, check the box, eligible for conventional or FHA, VA, do your seller a favor and see if the property is in the USDA range as well, because that'll open up a whole nother class of buyers. So be aware of that. And again, this isn't like, if you got a farm, think, oh, it's got to be a farm. Farms don't qualify for this. If you've got a barn, if you've got livestock, it doesn't qualify for this. Condos are eligible. So great program to be aware of. Okay, we're on to, let me see where we're at. Slide number 3. So when I look at these presentations, I always want to know how many slides there are. We're almost halfway through. So jumbo loans. So jumbo loans are loan amounts over $647,200. That is a jumbo loan. Different guidelines, a little bit more strict as far as debt ratios. We're going to be a little bit more heavy on documentation, tax returns and such. This amount is probably going to be announced in the next 60 to 90 days. This amount's going to increase probably to $715,000. That's kind of the unofficial announcement that likely is coming. But that is the jumbo market. Be aware of it. When you have somebody buying, over 650, over 700, that's where this conversation comes in. These loans, a lot of people think these interest rates are a lot higher. Sometimes they're a bit higher, but oftentimes we can do them for about the same. we have a lot of strategies, and this is where working with an experienced loan officer can kind of really come into play. But you know, I had a conversation. There's a listing out there for just over 3 million here on the east side. Had a great conversation with a buyer about jumbo loans and qualifications, and you know, they're ready to take it on. So the doctor loan, you've heard me talk about these in the past. Take note of these, not just be aware in case you stumble into one of these options, but I would say try and tackle this. The doctor loan is a great niche to get into, just like the VA loan. If you are a veteran yourself, or you're a relative of a veteran, or you know, hang out at the VFW, that is a huge pool of business. There's an agent, she's not on here today, but you know, her hangout, she's at the VFW not once a week, you know, 3 or 4 times a month anyway. And I've done a lot of VA loans with her. She's not a veteran, her spouse is, but she's in that network and knows VA front and back, and that is a huge part of her business. And you know, wouldn't it be nice if your networking was going and hanging out at a bar and having dinner once a week and making friends, and that becoming a huge you know, influx of business? Doctor loan the same way. I mean, you know, I don't know necessarily that you want to hit up your doctor for every physical and say, hey, by the way, did you know you can do a 0 down, no PMI loan option? Well, you absolutely can, and that's with the doctor. So just to touch on this too, we are blessed for 1,000 reasons to have the Cleveland Clinic and UH and Metro and great hospitals. I mean, I could tell all sorts of personal stories about, you know, why we are so blessed to have that. One of the greatest hospitals in the world, about 15 minutes up the road from the office I'm sitting in. But the influx of brains and business because of that can't be understated. And with that, you have home buyers coming in. So perfect example, you have somebody who, you know, grew up in whatever, Illinois, and they went to grad school, you know, med school in Baylor, and they want to get into a cardio program, and they are fortunate enough to get selected by the best cardio hospital in the nation, and they're moving to Ohio for at least 4 years for their residency. They're burdened with student loans. Well, guess what? We've got a 0 down program where they can come and buy and not have to rent. And oh, by the way, after 4 years, they may sell that house, or they may stay, but they may upgrade to another home in the area, or they may relocate back out of state, but that turns into a listing. That's a great customer, a great client, great contact for you to have. So work those. By the way, this also is available to veterinarians, podiatrists. We've got dentists are going to be rolling out with this. So just know that there's many different options, and it's a huge, huge niche that not a lot of people are aware. But Chris or Carmen, anything you guys want to add there?
Could I ask one question?
Yes.
Does this apply to physician's assistants?
No.
Okay.
Unfortunately, right now it's reserved for MDs and DOs. So there may be tweaks to this program. There has over the past 2 or 3 years, but as of this point, no, not yet.
Okay.
The bridge loans. So we talked a little bit about recasting. So I won't get into a ton of detail here, but we do offer bridge loans. So let's go back to that scenario I started with in the beginning. I have a $200,000 house I'm buying. I own a $100,000 house that's free and clear. I can go and get an $80,000 loan out on my current home and use that for the down payment on the next home. The guidelines are a little bit more strict than if you were doing a recast. There are closing costs to that bridge loan. There is an appraisal being done on that home. So you're doing 2 loans at once, but we absolutely do offer it, and it's a great option. We just lean towards the recast and most options. When we present the pros and cons to a buyer, most people lean in that direction. First-time homebuyer programs. Again, I'm not going to go into a ton of detail on this, but just know that there's not as many programs as there were in the past, and most of them have strings attached. But we'll talk about the OFA program, for example. OFA is the most popular program in Ohio for first-time homebuyers. Just to walk through it real quick, you can buy a $100,000 house and get a 2.5% grant. So you can get $2,500 towards your down payment. So if you're going FHA, you're putting 3.5% down. You just need 1% of your own money for a down payment. There are income limits, so you have to make below a certain amount. The closing costs are a little bit more. The interest rate's a little bit higher. So as I'm talking with a buyer, I might say, if you come up with your own money for a down payment, you're going to have lower closing costs, a better interest rate, a lower down payment, or excuse me, a lower monthly payment. But this is there. It is an option. So oftentimes, if you've got somebody who can't get into a loan without the down payment assistance, it's a great program. If you've got somebody who has funds for the down payment already, it might be a tougher call for them, but we present that scenario to everybody along the way. There's other grants. NHS through Cuyahoga County has a grant. It's a larger grant, but they run out of funding a bit faster. There's the My Communities, there's Chinoa. So we have several different programs. Again, I won't go through all of them here. We usually kind of counsel a buyer one-on-one, kind of, after talking to them, finding out their income, we can usually say, okay, well, based on this, you qualify for this program and this program. Unfortunately, not that one or that one. And by the way, there's just a 3% down. We have a great program, Fannie Mae and Freddie Mac offer. If you make below, depending on the county and zip code, let's say you make below $66,000 a year, you can go 3% down, take an online class for free. You get a discount on your interest rate and you get a discount on your PMI. It's a no-brainer. I've only over the years had one person tell me, I said, hey, I got this great option here. We quoted interest rates. I said, hey, if you take this class, we can knock 1/8% off your interest rate and save you about $20 on your PMI. They said, I have to take a class? I go, yeah, but it's online. You can stop it. You can start it. Some people zip through in an hour or two. I'll pass. So, okay, free money for, essentially the rest of your 30-year mortgage, and they opted out of it. But most people do opt into it. And most people are saying, you know what, Sean, I'm glad I took that class. I actually did learn too. So for what that's worth. Carmen and Chris, anything you guys want to add to that? I mean, these classes and ask a lot of questions buyers don't even think to ask. Chris, go ahead.
Yeah, the classes, what I end up hearing from buyers most is they say they almost wish they would have taken it in the beginning before they started, just because it is such a broad education of the whole process. But it's super easy. I mean, I've only ever had one person say it took them more than an hour and a half, 2 hours to do the class. So it's a great program for sure.
Yeah, they used to charge for it in the past, and now they've got some separate funding to cover it. So it's a no-brainer.
That's the OFA program you're talking about, Sean?
Well, that's just
any down payment assistance.
Yeah, so any down payment assistance or first-time program is going to have a class somewhere.
Absolutely.
Fannie Mae, Freddie, what's that?
I said yes, indeed.
Yep.
I'm right.
Yeah, Fannie Mae and Freddie Mac just have an online one. OFA allows an online or an over-the-phone one. NHS requires like 4 2-hour in-person classes, or they may have changed that recently, but so each one has a different guideline. That's why a lot of times it makes sense to say, hey, go take this class, and then they buy a house, and then we switch programs. Now they got to go take another class. So that's the one thing is, unfortunately, all of these programs aren't, on the same, don't sort of, what's the word I'm looking for, sort of sign off on or require the same class. They're all great classes, and there's, not one is any better than the other. It's just as far as checking the box for the required program.
John, what are you saying? OPA? Does that stand for something? What are the initials of that?
It does. OFA, Ohio Housing Finance Agency. It's a state program. It's funded with bonds. If you go to ohiohome.org, that's the main landing page. Now, they don't just do grants. They also do, help people keep in homes who are struggling. There's, renter programs, and has a list of all the lenders who work with that program. And, we're one of the bigger lenders in the nation, let alone Ohio and Northeastern Ohio. So you'll see our name pop up quite a bit.
And what was the landing site you said, or the website?
ohiohome.org.
Hey, Sean.
Mm-hmm.
Thank
you.
you.
Work with most, you work with most of them, don't you? Like Euclid has a program as well. If you buy in Euclid, they give a buyer, I have a buyer went through, like you said, those classes are great because my buyer got $10,000 from Euclid, and her first time buyer just sold a house in Cleveland where the buyer, they have that greater living, circle living. So that you're right, there's a lot of programs out here for buyers.
There is, and that's where, a lot of buyers don't know. If I live in, South Euclid and I'm moving to Euclid, I may have no idea about that program.
Absolutely.
People live in Euclid. So we do work with just about every program out there. Greater Circle Living is if you work for one of the nonprofits, and are buying within a certain footprint, you can get $30,000.
Absolutely.
No strings attached. There's no income limit on that either for part of that. Euclid, yep, we absolutely do that. It basically works as like a forgivable second mortgage. So you can get 10 grand for that. You have to come up with your own down payment still, but this on top of it, you know, $10,000. I mean, again, that's free money. That's $60 off of your payment for the life of the mortgage. And then, oh, when you sell that, it may be forgivable and you're essentially being handed $10,000 in the end. So it's a no-brainer.
The greater circle of living is also forgivable over the years. So
Yep.
Over the years, it is. Yep.
but there's the restrictions of the boundaries of where they have to purchase in as well.
Yep, that one, if you Google Greater Circle Living or Fairfax Renaissance, I think it'll pull up the footprint there. And these are ones too, as you guys have interested consumers, we always can pop that up for you or for the borrower.
Right, and working in the Cleveland Clinic University Circle, any of those areas, Shaker Square, Larchmere, Cleveland, surrounded around there. I've worked with them several times, GCL, Greater Circle Living.
Yep, we love it. MCC program, this one isn't a down payment assistance, but it's a credit, a certificate that a buyer gets when they file their taxes. They get in so many words, cash refund on the interest that they're paying. And it's kind of a no-brainer. There is a bit of cost to this. I think it's $500 or $600. This is more of a, you know, there's stricter income limits on this. So we always counsel a buyer on this directly, but it's also technically goes through OFA as well. Non-QM. Non-QM, if you've heard this before, it stands for non-qualified mortgage. The best way I could summarize this is your outside the box loan. You have a buyer who, you know, maybe they're self-employed for the past 2 years, and that's fine, but they're not showing enough income on their loan, to qualify for a loan on paper. We can do what's called a bank statement loan. Send us your bank statement for the last 12 or 24 months. We'll average your deposits and qualify you based off of that. Or you've got somebody, maybe sometimes it's some credit issues, oftentimes it's employment stuff, or maybe you have somebody who just moved here from out of the country. They have a credit report, but you know their citizenship hasn't. There's some off the wall things there. So these are becoming a bigger part of the market, but these are higher interest rate loans. You're not going to see something with a 5 or 6 in front of it. You're probably lucky to see a 7 and might have 8s in some cases. Likewise with this next program here, the DSCR, debt service coverage ratio. So let's say you have somebody, you know, as I mentioned, we're doing a ton of loans for investors, buying properties, you know, as rentals, and maybe they're self-employed or they don't show a lot of income, or maybe they don't have a job. All they do is buy investment property. They've got the assets to do it. They just don't have the income history to qualify. That debt service coverage is basically saying, okay, you're buying a house, the rent on it's going to be $200 and your payment's only going to be $1,300. There's a way to make that work. Again, you're not going to see a 5 or 6 or probably even a 7% interest rate. You're going to be a bit higher than that, but it is a function. It is a program that's available to get a loan out to somebody to have them buy a home. So, you know, the more and more lenders are having a harder time saying a no if they've got these options available. By the way, cross country has all these options available. Not all lenders do. And frankly, some loan officers may even have it or are just too lazy to explore it or offer it or go down that road. So anyway, all right, moving on to slide number 4, seller concession. So this, you've all probably seen these before, but this is more powerful in a shifting market. So I'm going to spend a few minutes here. And Carrie, I'm okay on time, right?
Okay. Oh yeah, you're doing fine.
Cool, thanks. So seller concessions. Seller concessions are basically a credit coming from the seller, or we can use realtor as well. Sometimes you have a realtor kicking in costs. This is all kind of falls under the same umbrella. But conventional, the amount of concessions, the limit is based on the buyer's down payment. So if a buyer is going conventional and putting less than 10% down, they can get a 3% credit. If they're putting between 10 and 20% down, they can get a 6% credit. And if they're putting more than 20% down, they're eligible to get up to a 9% credit. So let's just walk through the basic here. You've got a $300,000 house and you negotiate, let's do a $200,000 house. You got a $200,000 house, buyer's putting 5% down and they get a 3% credit. That's $6,000. That's a great number. $6,000 you can pay off, cover pretty much all of the closing costs. But the seller credit doesn't, as you see on that bottom number down here, I don't know if you're seeing my little cursor here, but the credit can go towards closing costs, points, PMI. Let's say you have a listing and maybe it's been on the market 2 or 3 weeks. Instead of saying, hey, let's drop your price from 200 to 190, why don't we offer a $3,000, or excuse me, a 3% seller concession? So that may catch some attention. Maybe lower the price to 199, so you've got that new, price reduction listed, and then put on there 3% seller concession, or go with a 6% seller concession. That's still saving the seller money. They're still not dropping it $10,000. And if I'm a buyer and I have a 6% seller concession coming my way, that's $12,000. That'll cover my closing costs. It'll allow me to buy down my interest rate with points. It may even allow me to buy out of PMI. So I have one realtor who some of you may know, who I'll give you a quick story here. This was several years ago, and she had a listing for, I think it was $330,000. And I had the buyer. She was trying to give you the best story here, the best way to structure this. Had a buyer pre-approved. They qualified for a little over $300,000, but had been looking for a year and couldn't find a house that they liked. They were with another lender. They came to me kind of reluctantly after a lot of urging by the buyer's agent. Hey, just talk a second opinion. Sometimes we can get creative. Let's see if we can't get something done. How this story ends, this buyer bought a $330,000 house, even though they didn't qualify for that at first glance. And even though they didn't want a monthly payment that high based on what their original loan officer was telling them. The listing agent basically said, I see that they're pre-approved with Sean. Have they talked to Sean about a single premium PMI? And in the end here, what happened was the seller sold the house at $330,000, gave the buyer a seller credit, somewhere it ended up being around $12,000 or $10,000. With that money, the buyer took that money and instead of applying it towards their closing costs, we did a PMI buyout. We took that money and made sure and paid up front for the PMI. This is part of my PMI class that I get into this scenario. But the buyer, because we had no PMI on this $300,000 plus loan, it lowered their payment a couple $100 to where they qualified, to where they were comfortable. And the seller, instead of dropping the price to $320 or going even beyond that, a $330,000 sale price with a $3,000 credit is a net of $320. I know I didn't explain this maybe the best way that I normally would, but this got the buyer into a higher price. It got them into the house in the neighborhood they wanted, got the seller to sell the house. The listing agent also had a bonus saying, hey, if this thing closes beyond within a certain date, the buying agent gets an extra $2,000 or something towards commission. So this was a win-win-win-win. And, I would say us as a lender, we won on that too. It couldn't have worked out better. And it was because the listing agent knew of this strategy. So in a shifting market, you may have to think outside the box. I had 2 people call me just yesterday. One is, hey, I'm working with a builder and we want to kind of advertise, seller willing to buy down an interest rate, paying X amount of dollars. How could we structure that? I had someone else who was a listing agent saying, I know we're, the market's changing. We've done this in the past. Remind me how this stuff works. So feel free to reach out. But this is huge. So on FHA and USDA, you can do a 6% seller credit. On VA, it's 4%. So just know these items. This is also on some of the flyers that I posted here. But don't just think of a seller credit as going towards closing costs. It can help buy down an interest rate. With if you got a seller kicking back 3%, you can buy down an interest rate 0.5 to 0.75%. That may soften up a buyer who's a little bit sort of sour on the movement of interest rates lately. So any comments or questions on that, or Chris or Carmen, anything you guys want to add? No? Okay. All right, slide 5. In a shift, what we know of, the last 2 years, it's been like, okay, cash offers first, then conventional. All right, we'll look at the FHA and VA. As we talked about, if you're still in that frame of mind moving forward, you're going to do, your seller and frankly the market a disservice. So did you know we have renovation loans for FHA and VA along with conventional? I've got a flyer for that. I won't go into a ton of detail, but you've got the old, trying to put lipstick on a pig and dress up a house. I had a buyer call me this morning and said, hey, I haven't found a condo I wanted in the price range until now. It's $125,000, but it needs to be gutted. I need about $40,000. Can it be done? Yes. 130 plus 40, it's $170,000 net price. He's a first-time home buyer, so he may put 3 or 5% down. The closing is the costs are slightly higher, the rate's definitely higher, and the closing process probably going to be 60 to 90 days. But this house has already been on the market for 4 or 5 weeks. Very likely the seller is okay with an extended close, but so this is a great option. If you've got a house, feel free to advertise the house saying, hey, seller motivated for, willing to take a renovation loan, extended close. These are all things that you'll see more and more of. As I mentioned, in this market, if a new agent kind of sits down and says, hey, I've been doing this for 12 months, looks like the market's changing. You've been sitting in this office. You've seen agents come through these doors for the past 15, 20 years. Any suggestions? It's like, yes, get a niche or just, be an expert on something, whether it's renovation loans, whether it's VA loans, whether you're working with investors. I know some of you, if not yourself, agents in here who have just made a killing and turned their career into, to a whole nother level because they're familiar with investments. Airbnb. I can't believe how many Airbnb properties there are. And you know what? Andrew Ginter and I had a question. He said, everybody wants to analyze why somebody would want to come to Cleveland and rent out this place in this suburb for so long. Who cares? They do it. And you know what? Oftentimes you're netting out more income than on a month-to-month, or a long-term lease. So be familiar with it, understand it and, explore it, exploit it, make it yours. Relocation. Again, there's, obviously there's relo companies and they take a chunk out of commission and all that, but, put yourself out there as the relocation specialist. There is, and I'm just, these are just ones that kind of came to mind. More, think of your last 10 buyers. If there was something unique with them and, oh, they were a veteran, go back. They've got other veteran friends. I guarantee it. Oh, they relocated here because they're part of the clinic. Well, guess what? They're probably landed in a department where people are relocating in every month. So those are the tips and pointers I would throw out there, even though nobody specifically asked for it. Being creative, like I said, thinking outside the box, a $10,000 price reduction, going from a $330 through a $320 price, how much activity is that going to generate? You would know better than me, but saying, hey, I'm going to give $10,000 to a buyer to cover their closing costs or buy down their interest rate or buy out of their PMI. That's going to get some attention. And in a shifting market, I mentioned this on the last few, but know your partners, know your lender. If it's not cross-country mortgage, get to know if this person you're working with. So, maybe over the next 6 months, you might be thinking you might have a little less transactions. Every transaction should be treated like gold. In a shifting market, even more so, because you've got loan officers, and I apologize, I still couldn't find the statistic for how many loan officers there were in 2019, just like realtors, but how many loan officers or realtors there were in 2019 and how many there are now in 2022. I don't know that it's doubled, but it's gone up a ton. And you've got loan officers who've been in this business for a whopping 2 years who have done hundreds of transactions maybe. But if you ask them how many loans were purchase transactions, your mind may be blown how you can be in this business and do so many loans and not stumble into a purchase transaction. And if you've got a loan officer who hasn't been in the purchase market, especially in a shifting market, you better be on their butts from application to closing until they have keys, you're handing over the keys. Because as you know, there are thousands of things that go through a transaction that can sour the deal. Maybe it doesn't kill the deal, but it can make it a whole rough experience. And if you're a listing agent and, hey, you've got to explain why your closing's delayed a week, or worse yet, not closing at all, and it's because, something wasn't properly communicated, everyone's going to be looking at you. So, I don't care if it's a loan officer is your best friend and you trust them with your own family or your own mortgage. You want to talk to them at least once a week and make sure application made, appraisal ordered, loan approved, loan clear to close, CD sent, documents at the title company. Just if you're a single agent, just think, hey, if I had an admin person, what would I have them do for me on every transaction? And that's got to be you. Those are on teams often have people kind of as a safety net. And I will tell you, loan officers, when they get that phone call on a Sunday afternoon, by the way, we welcome this call. Hey, Sean, I got an offer from your buyer. And by the way, we like to make these calls. So if you got a buyer putting an offer, more than happy to call that listing agent. When I have a listing agent call and say, hey, got an offer coming in, just want to make sure. And sometimes they'll be a little nosy. Hey, so how long have you been in the business? Great question to ask. And that kind of sets, I as a loan officer know, okay, I'm better be on my toes because this listing agent knows what they're doing. And I want to beat them to the punch. I want to update them before they even have the thought to ask. That's the expectation that you should have, and hold every person in the process accountable, whether it's title, whether it's loan officer, whether it's homeowner, home inspector, home insurance, all of that. So communication. When you have a buyer, when you have a deal or you get a bad review on something, I'm guessing 9 times out of 10, it's not that there was bad news. That might be a reason someone's upset, but it's oftentimes how or when it was communicated. And loan officers many loan officers in this business, the last thing there's a problem happening on Monday and the deal's closing on Friday. They'll work their butts off Monday, Tuesday, Wednesday, Thursday to try and fix the problem before they tell you on Friday. And that's the worst possible time. So anyway, that's my 2 cents there. So any comments or questions on that? Cool. Well, one more slide and it's 10:29. So I'm feeling real good about this. So this is my team. So nothing to learn here other than, hey, this is kind of the army behind us between Carmen, Chris, myself, Don. These are our processors. So Cross Country Mortgage has 7,000 employees. I couldn't fit them all in one photo. This doesn't show our underwriting, our closing department, but this is us. This is our branch. So as we typically say, if you get one of us, you get all of us. And I kid you not, there is between the processors in this photo, the loan officers, the LOA, the loan officer assistants, there's no better team that I'd rather work with. And I hope the same for you guys. So anyway, I didn't leave much time for questions, but anyway, that's our presentation.
Thank you so much, Sean. That was awesome.
Quickly, Sean, really quickly, come and visit us. We're on the first floor now. We have a new office renovated.
We got a couple coffee makers, some snacks, and a microwave.
Lots of snacks. If you guys can leave your contact information in the chat as well, although I'm sure at this point everyone probably knows how to get a hold of you.
Can do. All right, and yeah, if anybody needs us, you know where to find us, hopefully, and we'll get that into the chat box right now.
All right,
Thanks,
just
everyone.
really quickly, guys, in about maybe 1 or so seconds, I want to quickly go over some of our upcoming events again, just because a few people popped on after I already talked about them in like the 5 minutes that I went over them. So there is in 2 Tuesdays a 3-hour CE class. It's via Zoom and it's free. It's civil rights credit. Julia's going to throw the link in the chat if you want to hop on that. We have our business planning clinic coming up. This is 6 hours of CE. Again, it is an all-day experience where you plan your business for 2023. Use the code KWGM agent to get $10 off your ticket. This is a great refresher and really helpful for you to plan to have a great year next year. The KW Effect is coming to Cleveland. So this is led by Aaron Kaufman, the self-proclaimed evangelist of Keller Williams, and he's going to share everything about the value of KW, how to grow your profit share downline and get your unfair share. He calls it an unfiltered KW stakeholder meeting. And the Mega Agent Camp recap. If you couldn't come to Mega Camp, this is a great event to attend. We're going to have a market update, share some shift tactics, and you're going to get a Mega Agent playbook at this event. There's going to be catered breakfast. All our vendors are going to be there. It's going to be a great morning. And the Clambake, if you haven't yet gotten your ticket, be sure to do so. This is KW Care's #1 fundraising event of the year. We've already sold almost 200 tickets. You do not want to miss out. Feel free to invite your friends, family, clients, all that stuff. All right. That is all. Thank you guys for joining us today. Have a great rest of your day.